What's up, traders? Welcome back. It's Kenya with BK Forex Academy. I'm one of the owners and educators where we help new and struggling Forex traders learn how to trade with structure and guidance so that you guys start the right way, have a breakthrough, and trade confidently. In today's video, we're going to be going through an analysis of CHFJPY. I'm going to give you your trading plan for the week, tell you what we're seeing on this pair, and how you can approach it to find a high probability setup. Now, if you are new here, make sure you subscribe and turn on that notification bell. And also, I need you guys to do me a huge favor, smash the like button on this video, and let's go ahead and hop right in. Guys, so we're hopping into the monthly. We're going to do a top-down analysis of this pair and figure out how should we approach this on the lower time frame. Now, one of the things that I like to do is look at sometimes the weekly, monthly. I'm a scalper and swing trader, so I like to look at the weekly and also the monthly just to get a gist of an overall feel for what's going on in the market. And as you can see on this monthly time frame, if I simply turn this to a line chart, you can see that we have long impulse wave, and for the first time this month, we're finally seeing a red candle print. So after you have an impulse wave, you want to see some type of correction, usually at least 50% to the 618 fib level. So if we do even grab our fib and we measure off of this monthly candle, you can see that we did get a retracement back to the 50% fib and price rejected off of it. But if you look at what's been going on for the last couple of weeks, we're going to drill down to the lower time frame so we can drill down to the actual weekly. You can see now that price came to about 14350 zone, and then this candle here, this current candle on the weekly, so last week, tried to reach that high again and rejected, and now it's showing us that bullish strength is starting to weaken. So how can we approach this? One of the things I like to also look for is some type of pattern, some type of potential reversal pattern that could be shaping up. Now, it is a bit risky if we trade against the trend, but we can trade this with a very low risk to reward and also come out strong, in my opinion. So based on where the current price is to this top of this wick is about 160 pips. So regardless of what we do, we want to make sure that we're prioritizing our risk management first and foremost. We don't really worry about how much we're going to make first. We want to prioritize our risk and make sure that we can strategically lean our stop loss against structure. So one thing you'll notice here is if we go down to the daily time frame, you'll see that we currently have a double top forming. So we have a double top formation or an M pattern that's coming together. Now with these type of double top formations, I particularly like to get in at the very top of resistance. Some of us are taught to wait until price breaks the neckline of this reversal pattern to get a safer entry, because if that happens, what we usually will see is that price will break that neckline. We then will get some type of retest back into that area, or that's what we really want to see. And then hopefully we will get a continuation downward for price to complete that pattern. So ideally, that's what we want to see with a double top pattern. It doesn't always happen that way. So that's why you have to use confluence, extra confirmation of other things to help you with your trade entry. But how can we approach this now? So there's two ways. Number one, you always want to establish your directional bias. So on this daily time frame, you can see here that our directional bias is bullish. Okay, so it's bullish right now. This is what we're seeing. Now we could wait for a break of our trend line, and we could wait for a retest and then decide to get short, or we could also wait until the price comes here. So if you are a scalper, for example, this is the level you will want to be watching this week for when the price gets there. Okay, so that could be a bounce area where you could probably grab some quick pips. So this is about the 139.07 area, and let's just measure how many pips is away from the current candle from here to about this support zone. That's about 239 pips. So that's a lot of pips. What I like to look for is very strong technical levels where price is most likely to bounce and give us a really good, some type of movement from that area. So considering this, I don't really see an area right here. If we kind of move this zone up a little bit, so I mostly look for swings on my chart, but if I move this here, you can see that we did have a previous area of support, and it was also daily resistance as well. So this could be our first zone where the price will come to potentially, and we could have some type of reaction. Now, from where this current candle is, that's only about 93 pips or so. So in my opinion, for a scalp intraday opportunity, this would be a good price level to watch right about this 140, I would say 22 or 20 area is where you want to watch. So what we would expect is for the price to come here to this support zone, give us a bounce off of it. So this would be an area where you potentially could get a scalp. Now, if the price doesn't slow down as it moves into this zone, you simply wouldn't take the trade, but you want to look for all of your entry confirmation reasons for why you're going to enter that trade. Now look here, if this does happen, what we can do is simply drill down to the 4 hour. So we're going to drill down to the 4 hour. Now look on this 4 hour, what we would like to see. Now, one thing I notice here is that you'll see a support, you'll actually see a demand zone here on the 4 hours. So in today's open, when the market does reopen, what we might see is the price bounce off of this support zone here. And we still would have our uptrend on the 4 hour. So look here, you can see that price is actually kind of wicking through or kind of going below the 50 MA. I like to use the 50 MA for confluence, but what we want to see here, guys, is that this price will eventually cross the 50 MA. And if it does, you can even get short because this will be a breakout to the downside. And the next zone that it's going to bounce is right here. Okay. So that's one thing you can do. You can trade the breakout of price crossing the 4 hour, drop your stop loss above this 4 hour candle, and then take your TP along from here to this zone here at about 140 down in this 20 area, okay? And you know that we're still in an uptrend on the daily. However, you'd be shorting on the lower time frame. That's one scenario that you can do. On the 4 hour, like I told you before, you want to find an area where you have a good, strong area that was both previous support and resistance. This is the next bounce zone, in my opinion, where price is going to come. Now, as you can see here, price was very strong resistance. Look how much the price fell. It was also support. And look how much the price went up. It was also resistance in this area. So resistance right within this area. So we're looking at an area, right? So we really could stretch this rectangle a bit just to make sure that we are kind of covering where the price could reverse. So this is the second bounce zone that you want to keep your eye on. So your first one is here right at about 14114. And then your next area that you want to keep an eye on, if you short, you can take it down to about 140 even, and you can move your stop loss to break even. Okay. So that is your opportunity going into the week. I do believe that we will see the price go up and down a little bit. But one thing I've noticed on CHFJPY is that hedge funds and banks are closing a lot of their long positions. So more shorts are being opened at this point. So guys, I hope that this was helpful. I've given you an analysis of CHFJPY and how to trade it. I've given you your buy zones and where you can expect to buy. You also, I would say long-term, keep your eye on this level right here at 138.89 area. So as you can see, if we go out to the daily, you can see that this is strong support here. So this is your double top pattern. And when we break this double top pattern here, when price breaks this neckline, we can really look to get short, which means that price will probably continue to the downside. However, we do want to keep in mind, if you trade with the 50 MA, for example, this 50 MA is acting as dynamic support in this uptrend. So what we would expect is that if the price does break eventually and break this neckline here, the next area that it's going to come to is right above our 50 MA, which also aligns with a very strong area of resistance. And I'm sure this was previous support if we scroll out. So guys, keep your eyes on the levels that I just mentioned. Comment below if you guys have any questions. I hope that this top-down analysis helped you and also gives you ideas and how to approach your game plan this week. I look forward to seeing you guys in the next video. Don't forget to like, subscribe, and turn on the notification bell and check out our uploads every week. Follow your plan, and I will see you in the next training video. Thanks for watching.